Hello everyone, welcome back. Got a really good one for you today. I'm going to talk about the supply chain issues, shortages, the bottlenecks, the inflation undermining all of those issues. So let's dive right into it. We don't have any time to waste. So a lot of these supply chain issues started, I guess you could say, back when the Evergreen got stuck in that canal, the Suez Canal. And they were saying, oh, look, the supply chains are all jacked up now just because of this one ship. But then it kind of turned into like shortages in chips. So from, issues in Taiwan, getting chips for vehicles. Now you're seeing shortages in baby formula, people driving 8 hours, spending God knows how much just to get, their baby fed. We're seeing shortages in wheat and grain. A lot of that is from the war in Ukraine right now. I don't think America sources a lot of its wheat and grain directly from Ukraine, but there's still a massive gap in supply that's got to get filled somehow. I think one of the best ways to approach our supply chains and the situation on the ground would be to actually kind of roll the clock back maybe like 20 or 30 years. Let's say I owned a department store like in the 1990s. There's a good chance that when it comes to inventory, I'm ordering like 1,000 suits at a time and I'm sitting on tons of inventory. But in today's economy, nobody does that. If anything, like if I'm a department store, all I'm really gonna do is build a really good website. And as soon as people click buy, I'm not even gonna process that order. Probably my supplier is, and they're gonna just ship it directly to the customer. So we started using these just-in-time supply chains, which are a lot more efficient and they're a lot faster. They run 24/7, 365. They lower costs for shipping. Like, they do all sorts of great things. They lower costs for the companies that are using just-in-time as opposed to sitting on massive inventory. But the drawbacks are that there's a lot of systemic fragilities and risks built into these really complex, highly automated, lot of AI supply chains. So when you have like one issue anywhere along the way, it creates this weird bottleneck that backs up and then it just spills over into the rest of the economy. So, it could start as a shortage in something really simple, but if businesses are trying to source materials to serve other businesses, you can see how that can have a domino effect and start to compound a lot of issues. So the situation on the ground right now, as far as supply chains, is far from resolved, far from pretty. We also have an issue with regulations. So a lot of these like ports that the politicians and policymakers are claiming are running 24/7 right now really aren't. Some of the reasons for that too kind of make people mad. Like, maybe there's a regulation that a certain kind of truck only can deliver a certain kind of good. And so when you're adding these regulations to an already fragile supply chain, you start to even compound those issues further. Another problem is energy costs continue to rise. So if you listen to a lot of truckers on the ground right now, they'll tell you that they've never seen fuel prices higher and rates for moving product lower. And that disincentivizes a lot of these entrepreneurs and truckers from even wanting to move products. So you might have a bottleneck in a supply chain just from not enough incentive to move that product. And that lack of incentive could be, attributed a lot to these really inflated energy costs. So this whole $120 a barrel WTI crude, it is not helping the situation. And yeah, there are also the politicians and policymakers pushing for, net zero, trying to turn off the oil spigot, the energy spigot, so to speak, and that's stressing things out further. Economics is just energy flows through a society. It's just energy flow. So if the cost of capital and the price of energy is skyrocketing and it's squeezing margins, you can see how you might even start to see like demand destruction in your economy. Like, people don't even individuals no longer have disposable income if they're spending $100, at the gas pump. Like, if they're putting $120 in their tank, that might create demand destruction in other places in the economy because normally they'd have the disposable income to buy these items, but they don't anymore. And so as all these, issues just kind of occur and compound and affect each other and turn into this big ball of wax, it just starts to spiral out of control. And then you have a psychological expectation built in for more inflation, for more dusty shelves. And once that psychological expectation starts to get entrenched in consumers, you see this weird drop off in productivity and supply. So the longer we wait in reversing these trends, the more entrenched they become, and that kind of creates issues in and of itself. Another issue is creating artificial demand where there's no supply. So, from the stimmies and from the QE and, all the financial engineering and the fake money, we're kind of in a situation where we have a ton of fake money chasing not that many goods and services. And that creates all these rising prices and jank things up even more. Like if I gave everyone in your neighborhood like $1 million right now, they would all go out and spend the money. And the liquor store close to here, or like the bike store, or even like the restaurants, whatever, they're all going to be out of product because you took all that future consumption and you just dropped it on people into the present, and they just went out and spent it. And so you stimulated demand without stimulating supply, which creates shortages and creates rising prices and destroys price signals and starts to jank everything up. So it's a really complex issue. It's like a big ball of wax. But, maybe we can start alleviating some of these issues and discussing potential solutions. And so that's kind of where I want to go with it from here, instead of just being like, here's all the problems, you're all gonna die. Go doom scroll on something else now. Let's try to tackle this. So what I would do if you put me in charge right now, first I want energy costs down. Way I would do that is stimulate the supply of energy and simultaneously raise the interest rate on the dollar. That'd put a lot of downward pressure on energy prices and could help just kind of soothe everyone and just kind of flood the world with a little bit of energy and growth. I think that would be really good for wage earners and people that are just getting absolutely axed at the pump right now, and maybe even being forced into a situation where they don't even want to work anymore. They want to do just the bare minimum to get by. Like, they don't want to produce more than they consume because they're already just so tapped out by everything up into this point. So I would want to bring energy prices down, because that would disproportionately help the domestic economy and 99 out of 100 people. And I'd want to raise the interest rate on the dollar so those wages actually could buy something and actually create a little bit of social upward mobility. Another thing that I would want to do is find those points inside of the supply chain. Like, let's say if you order a pair of shoes off Amazon right now, it might make 16 different stops to get to you, and 2 or 3 of them are probably clogged up relative to the others. So you're going to want to kind of zoom in and find out where those specific points along the supply chain are jammed up, and just kind of get creative in addressing each of them individually. So you could kind of just alleviate those certain bottlenecks along the supply chain, bring energy costs down, bring the value of the dollar up. What else could we do? Another issue we're seeing is a lot of entrepreneurs aren't really incentivized to grow their revenues. So if you have a business right now, you're not really concerned with growing the top line. You're more or less concerned with saving your margins, because the inflation is squeezing everyone, the supply issues are kind of squeezing everyone, and it's just kind of pushing everybody into a corner. So if you're an entrepreneur and you're trying to stay alive this last couple of years with your business, you're probably much less concerned with growing the gross revenue, and you're probably trying to save your 30% margin, your 30% profit margin that you're used to getting, because right now it's only 15 from inflation. So that's bad, because entrepreneurs don't really want to grow their company, and they don't really want to put money into capital investment either. They don't want to go out and order 100 or 1,000 computers right now, but they'll still borrow, and that's where things get really weird too. Like if you're the CEO of a really large S&P 500 company right now, there's a good chance that you might not want to allocate like millions of dollars to new computers and capital investment and like physical material growth in your company, but you just might want to engage in some sort of financial engineering where you'll be able to borrow from, a commercial bank or an investment bank or somebody at really low interest, and then just buy your own stock with it. Buy assets with it. Buy things that are just going up with the cost of capital, and just borrow and buy, borrow and buy. But that's not productive. That's not getting things moving again. So, circle back to solving the problem. I'd want to try to like incentivize entrepreneurs to start growing their companies, making capital investments, as opposed to putting them in a situation where they just want to borrow money cheaply and engage in some form of financial engineering because they're being forced to through these horrible, weird price signals and weird inflation. And it's just basically jacking up opportunity cost. Because if an entrepreneur is out there hooking and jabbing in the Main Street economy right now and everything's like barely slogging forward, the opportunity cost of doing something else, like borrowing $1 million at 2% interest and buying Bitcoin or your own stock or Apple stock, the opportunity cost is really, really high. So we need to do a better job of aligning incentives. We need to do policy that better aligns incentives. We need to address direct spots along the supply chains. We need to draw liquidity out of the system and bring more supply into energy. And look, it doesn't have to be oil. Like, I get that it's not sustainable. Like, I'm not the biggest fan in the world of drawing it is an extremely dense energy source, but like, rotting vegetation that's taken millions of years to form out of the ground and then just burn it, turning it into plastic and throwing it into the ocean or burning it into the atmosphere. Like, I know that on a long enough time scale, that's not sustainable. So it doesn't even necessarily need to be oil. We just need a more diverse energy portfolio then. We need to look at geothermal. We need to get involved in nuclear. We need to do more solar, more wind. Even these more renewable and diffuse energy sources, we just need to tap them into the grid more efficiently or find ways to store this energy and just use it more efficiently. So a more diverse energy portfolio, cheap available energy, bring wages in the dollar up, incentivize entrepreneurs to make capital investments in their people and in their companies and in their communities. And what else will we do? There's a lot. We can fix the money. Fix the money. Keeping the interest rates artificially low is just really jamming everything up. So fix the dollar. And then I think the supply chains and the bottlenecks would, kind of sort themselves out. The shortages would kind of sort themselves out. Because right now you have a lot of fake money being misallocated into these weird areas of the economy, and it's not going where it needs to go, and it's really just jamming everybody up. What else do we need to do? Maybe mid-long term, I would start to repatriate some of our manufacturing and make our supply chains maybe more anti-fragile by having them close to home. I also think we're sending a weird message to other countries by having this massive trade deficit where we're bringing in all these goods and services from other countries, but we're not really exporting, a surplus. We're actually exporting a larger and larger deficit, and we're printing that difference. And so I don't think that's really good for what's going on outside of your window and in the real economy. And I think the B system and the 401ks and the pensions and, Larry Fink at BlackRock and Janet Yellen and Jerome Powell just need to get, tapped into what's actually going on the ground and in the real economy. Because we've had this massive departure, especially in the last 20 years, between the real economy and the financial system. And these people like to pretend that they're the same thing, but they're not. Will we get these supply chain issues and shortages sorted out quickly? It's not looking too good. Larry Fink came out today, and that's who you need to pay attention to. He's like the real president of the United States. Larry Fink owns BlackRock. It's a investment bank with $12 trillion in assets under management and 0 customer accounts. Like, they run that's the shadow government of the United States. And he's saying broad sustained inflation, janky supply chains as far as he can tell. And I kind of agree with him. Like, it could be a few years even. I think the most recent credit cycle started in 2020, and so we're only a couple years into this credit cycle. So what you've been experiencing the last 2 years, I would not be surprised if you experience for the next 6 to 8. Could be wrong on that though, and I really hope I am. So I really hope a lot of these issues get addressed. I hope I did a better job, like, kind of explaining, maybe giving you a little bit more context as to what's going on. I mean, one big issue, and Yellen, they got to sort out the Treasury Secretary and the Federal Reserve and BlackRock. Like, they got to sort these people out. Because you got Yellen going on TV yesterday and apologizing over the inflation, like her and her 850 PhD economist had no idea. And there's just no excuse for that, because there's going to be no punishment. And, you know, I could have told you they were just going to wait to destroy the dollar and then come out and say, sorry, we didn't know it'd create that much inflation. Like, so I think that's been pretty frustrating. So we have some issues with leadership, policy, knock-on effects of bad policy, systemic fragilities and risks all along a just-in-time supply chain. And then another weird thing that happens is, I know I explained with just-in-time supply chain, a lot of entrepreneurs don't want to sit on inventory, but now that inflation genie is out of the bottle, they might even be front-running a ton of their consumption. Like, let's say I own a cleaning business, and I think prices are going to keep rising, and there aren't going to be chemicals for me to buy at the store. I mean, that's 2 really good reasons for me to go out right now and then buy all the chemicals. So it kind of becomes a self-fulfilling prophecy. And then that's hard for the company selling me the chemicals to get a beat on, you know, what demand is going to be for the next month. Because one minute everybody wants all their chemicals, the next minute nobody does, the next minute they can't even sell the chemicals. You can see how there's just all these issues, and they're all just kind of bumping into each other. Like, I feel like the policymakers thought they could just shut down the global economy like, you know, a computer, like you just do a hard reboot. But I think it's a little bit more comparable to like an aluminum factory or something. Like, they cooled off a factory that's supposed to run 24/7, 365, and now you have this molten metal like cooling inside the pipes, if that makes sense. So it's going to be really expensive now to get things moving again. And then the harder it is to get things moving again, the harder it is to get things moving again. So it kind of becomes like this self-licking ice cream cone, this positive feedback loop. And it's complex. These issues are really complex, but hey, I hope I kind of help give you a better idea of what's going on. And I hope we figure it out, because it's getting kind of weird. Listen to Larry Fink. Larry Fink will tell you what's coming. Till next time.